The idea of energy independence is a complete nonsense, because our trade balance in energy or oil could be positive, which means that we export more energy than what we import. But that does not mean energy independence, because we still import 6-7 million barrels a day of oil of a different quality.
Very interesting. Okay, so let's talk about that right now, Dr. Anas. The crack spread that everyone is kind of keyed in on, that 3-2-1 crack spread that at least we can trace on Bloomberg, that has historically been a single-digit dollar item, maybe as wide as $10, has now widened out to the wides of $60, currently settled back into the mid-40s. To me, this is a good sign. That was a good sign of gasoline demand. Can you speak to that a little bit about the position that the refiners are in now, and whether or not gasoline demand is going to fall dramatically if we slide into a recession and the price can fall, or it'll be a scenario where maybe we slide into a recession, but oil prices remain firm because the market's so tight? And I'm only wanting to speak to that a little bit, Dr. Anas, because as you can see, the sell-off on the screen in the spot price is very steep, and the market structure looks to remain fairly firm as far as I can tell. And I don't get to see that very often. So let's hear your thoughts on that whole package, if you can.
If you don't mind, I just would like to finish, to go back to the earlier question, because
yes, I cut you off. I
apologize. So what we ended up with is, during that period, that the price differentials were very large, and U.S. producers got hurt and refiners benefited. So if the Biden administration right now reimposes the ban on exports as a policy to lower prices, we are going to end up with the same situation where the differentials are going to be very wide, and refiners are going to take that oil and ship it overseas, and American consumers are not going to benefit from it. So, and if we go down the list of all these policies, basically almost the same idea. Someone is going to get hurt. The U.S. economy may not benefit, the consumer may not benefit, and at the same time, if we ban exports, even if we ban exports of gasoline and diesel, we end up hurting the Europeans, who are literally trying to impose a ban on Russia. So we end up hurting our allies too. So if it works in economics, it does not work in politics. If it works in politics, it does not work in economics, and that applies to all the 11 policies. So to go back to your question about the gasoline issues, and we have serious refining problems in the U.S. and some areas around the world. So whatever happened in terms of the crude market, and whatever happened in terms of recession, product prices, gasoline and diesel, is not going to decline proportionally to the crude decline because of a recession. Simply because we don't have enough refining capacity to provide that gasoline and diesel anyway. And at the same time, we are ending up with a situation where China and India are still restricting their exports of products. And probably we cannot even go and import from them anyway if we need it, simply because most likely those products are coming from Russian oil anyway. So we got stuck. And therefore, the main conclusion of this is, as crude oil prices decline because of the recession, gasoline and diesel prices may not decline proportionally, and that will create a big problem for the White House, because the White House been complaining about this, why gasoline prices did not decline like the way crude prices declined. They don't understand what the mechanism is, but the fact is, with the recession, we are going to encounter the same problem, and probably we'll see more pressure from the White House on the owners of gas stations.
So that's quite a predicament now that the Biden admin is in, having, not totally, but a lot of their policy has contributed to the higher price. We're coming up on midterm elections now, and, you kind of exhausted so many of the possibilities and so many of the options he's had. What would the Biden administration desperation option be to get gasoline prices down? Do they have one? Or do you think it could be a scenario where maybe WTI backs off, like you just said, but gasoline remains $4 or $5 at the pump?
Something got to give. I mean, whatever the policy is, there is a trade-off. So let's focus on Biden's visit to Saudi Arabia. I strongly believe that both sides have already agreed that oil will be kind of a side issue. It's not going to be among the main issues. And the idea here is, if the Saudis are not going to help, why waste political capital on this while they are not going to increase production? The fact is, even if they promised Biden to increase production, that production is not going to be in the US until way after the election, probably early 2023, because they need to produce it, they need to ship it. It takes probably about 8 to 9 weeks to arrive in the United States, and then you have to ship it within the United States, etc. So we're talking about 2023. So Biden is not going to benefit in terms of election, just wasting political capital on convincing the Saudis to do that. But the Saudis might end up extending an olive branch by increasing supplies. And here, supplies, I'm going to put 2 underlines under supplies. The reason why, because supplies are different from production. They may not increase production substantially, but they can increase supplies. And the reason why, because they consume a lot of oil during the summer months in the power sector. And by the middle of September, that's almost the end of the summer there, and the cooling season basically comes to an end. And as a result, they can end up with 300,000 to 400,000 barrels a day of oil that can be transferred from domestic consumption to exports without changing production. So the word supplies here is very, very important. Now, Biden can come back and claim victory, regardless of the real impact on this, which is good for him and good for the Saudis anyway. But the issue here is, if he really wants to do something serious about gasoline prices, he got to take some serious measures. And some of those serious measures come at a cost. Is he willing to do that? For example, we've seen it in China. China went for a lockdown, period.
Oh, I knew you were going there. That's his only option, right?
Well, I mean, you ask for those extreme options, and this is one option, is to go for a lockdown and he does not have, by the way, Biden does not have to go for a lockdown. Just some Democratic governors can lock down their states.
Yeah.
And he will not be affected by it politically. And that's enough, basically, to provide some breathing space in terms of gasoline and diesel consumption, at least before the election. But again, it's about trade-offs, period.
Yeah, I can see that. I have a question for you about something that's super topical. We know that the SPR release has likely, in my opinion, probably been keeping oil from kind of running away on the upside, if that's fair. And I'd love to hear your opinion. How do they continue to play the SPR release number one? And will he try to tap that again? And the second question I have is the SPR release oil making it to China a scandalous event or an explainable event, right? I see both sides of the aisle getting all worked up that some oil went to China. I could kind of see both sides of the story on that one. I was wondering your opinion, Dr. Anas.
First of all, the debate about the effectiveness of the SPR been going on for 3 decades in the United States. And it reached a point where Republicans wanted to sell it and literally shut down the Department of Energy. They don't want the Department of Energy. They want to put it under like the Department of Commerce or something else. So they want to end it completely. And there was this debate even among professionals, what is the usefulness of the SPR? And for those interested, they can go to my Twitter account and see all the debate, because I wrote an article that sums up all both sides of the debate. We do have enough empirical evidence to show that the impact of releasing the SPR on lowering prices is very limited. And lowering gasoline prices is only few cents. But you started the question with a very intelligent statement when you said, well, it prevented prices from going up. That's really where the impact is. The impact is prices should have been above $140, and we did not see it, thanks to the release of the SPR. But it's not the typical release. In fact, in my research 20 years ago on the SPR, what the main advice was, and this is public, people can see it on the web, it was that they have to announce the release of massive amount. People basically be laughing at that time when I said this. It's a massive amount, and it comes with a statement that we will keep releasing it until we see the results we want. Historically, it was, okay, we are going to release 30 million, end of story. Now they came in literally with this recommendation that we are going to release 180, and if we need to release more, we will keep releasing. And the use of 1 million barrel a day in his statement was, I know exactly, in a sense, who are the people who came up with this idea to say 1 million barrel a day instead of 180 over 6 months, because that was very important for the market to say. So the impact of it is it did prevent oil prices from going above 140. But for people to understand the dynamics of it, along with the increases from OPEC members, is that we keep releasing oil from the SPR and prevent prices from going up until we reach a level where they start depressing prices. And probably we are there. What that means is any additional oil right now is going to depress prices even more. So now, after releasing a very large amount, now we are seeing the pressure on prices for the decrease, because it already ate or countered all the powers that force prices up. And now it's the impact of it, or the weight of it, is larger than the other side, and therefore we are seeing pressure on oil prices. And therefore, any extra oil right now coming from OPEC is going to depress prices more than before, because in economics, everything is determined at the margin, not by the average. And therefore, if you reach a level where prices start declining, the additional 100,000 barrels of oil coming out of OPEC will have a larger impact than the same 100,000 2 months ago.
Right, because the oil market is still digesting the recent SPR release. Is that correct?
Correct.
Got it. Very interesting.
And regarding China, no, there is nothing. When I wrote that tweet that went viral in last September about the crude going to China, that was mostly a response to the energy secretary when she said this oil is going to go to U.S. refineries. And I responded by that tweet saying, watch this oil going to China, as kind of a response to the secretary. But that oil basically is going everywhere. And if it is going to China, that's really good. Because it is reducing the demand for other oil somewhere else, probably the Russian oil. So it has an impact globally. At the same time, it has a different impact that analysts missed. And the impact is this, that U.S. refiners are buying this crude. And if U.S. refiners did not buy this crude that's been released from the SPR, they would have been buying it from Saudi Arabia or Norway or Nigeria or Ecuador or any other country. And therefore, the demand would have been higher and prices would have been higher. So people are not counting the increase that would have happened in imports that did not happen because of the SPR.